so grateful for everything that Jio has done for not just our business, but the entire ecosystem and the ease with which now we can not just serve customers, but the story we have to the outside world. And I think sometimes we forget, sitting in India, what an amazing thing has happened in the last 3 years. And I spend a lot of time in the rest of the world right now fundraising, and I can tell you everybody is just buzzing about the Jio effect. So very excited to be here today and tell you how it's impacted ZestMoney in our business. We have the cheapest data in the world now, and the Indian consumer went from number 15 to number 1 in terms of per minute data consumption in the last 2 years globally. And I was in London a couple of weeks ago, and I got on a train, and I was like, this looks strange. Everyone's reading newspapers and books, because that doesn't happen anymore in India, right? On any mode of transport, people are consuming video and music and data and content. And it's the most amazing adaptation that's happened in the shortest time. And not just because it unlocks new distribution channels for founders like us, but specifically for my business, it raises the level of aspiration that a consumer has. So if they're spending hours a day consuming content, they're also spending hours a day dreaming about owning the products that they're seeing on that screen. So whether that's a really cool smartphone, whether that's a laptop, maybe it's an AC or a TV, the problem is that those products are still unaffordable. And that's what we try and solve. So we don't believe that we sell credit. We actually never use the word credit or loan in our business. It's a banned word. We sell affordability, and we think that's a very different concept. Indian GDP per capita has not caught up as quickly as our data consumption. We all know that. And that makes the kinds of products that our customers want to buy extremely unaffordable. And they don't need to be, because the data and technology that we have today can help us underwrite in exactly the same way ACO is doing, in a very, very efficient small ticket way. So we are not proposing a return to the credit card heyday or personal loan phenomenon of 10 years ago. What we try and do is work with manufacturers and retailers and simply make their products more affordable. That's it, for customers like this. A close comparison could be a company like Bajaj. I'm sure some of you are thinking of that when I talk about EMI. But guess what? Bajaj's minimum salary requirement is 50,000 rupees. That might not sound a lot sitting in Mumbai, but less than 10% of India will ever earn 50,000 rupees a month. And that leaves a huge market that is so far untouchable to most consumer lending companies, but very attractive to us when we work with digital distributors. Here's the data another way. In case you don't know, there are 41 million credit cards in issuance today in this country. 41 million. That's actually available on the RBI website. You can go and verify. And if you have a credit card, you'll know that you are probably targeted by many other credit card companies, which means the actual unique number of credit card holders today in India is less than 10 million. And they're not being used as credit instruments. As we all know, a credit card is a transaction instrument. We use it to get points and lounge access. So it's not providing affordability, because it's the ultimate chicken and egg. The people who get credit cards don't need them. The people who need them are not eligible. If you add on top of that all the gold lending companies and other small NBFCs who are willing to lend to the Indian consumer, you still get to a total addressable market of about 60 million households. 60, that's it. On the other hand, we see 200 million households today who have an income level that could easily support a small consumer or consumption loan product. There's no reason why they shouldn't be eligible to buy that television or fridge with an affordability product. So that's who we serve, this 200 million. And we call this transactional credit. That's the sort of global sexy term now. It might sound a bit crazy at an India concept, but in the rest of the world, these products are flying. I'll draw your attention to the Australian one, Afterpay. This is a $3 billion listed company, $3 billion company, doing exactly what we do, small ticket, EMI, effectively, online only. And that's in a population with 12 million online shoppers. So no matter how cynical you are about the real state of e-commerce in India, I think we know there are more than 12 million people shopping online today. And that's an amazing opportunity when you think about 99% of those people already have a credit card. Our customer doesn't. So what we're exploiting is not just a massive underserved market in India, but also a global phenomenon, which is that young digital people hate credit cards. Credit cards fundamentally are a horrible, horrible business model. Their entire revenue model depends on tricking you into late payment fees. That's literally the business model. It's free for the first 30 days, and then they wait until you mess up and deliberately hide the repayment mechanisms so that you end up paying late fees. Entire businesses like Cred have now been invented to solve that problem. We think this is the real solve. Stop giving people credit cards. They're heavy, they're ugly, and they're a horrible business model. Instead, work with the manufacturers and the retailers and provide credit at the point of sale where the customer needs it. And guess what? Most retailers actually have the margin to be able to pay those late fees on behalf of the customer. So we don't have to rip off the customer to make these products affordable. So this is how we do it. We partner very deeply with all of the largest digital brands in India today. This is one of our first partners, Xiaomi. They passionately believe in what we do. They want to get another 250 million smartphones into the hands of Indian consumers in the next 12 months. Do you know there are still 280 million feature phone users in India, and they could all be converted if these products were made more available. So we work very closely with companies like Xiaomi to sign up the customer on the fly, on their website, on their app, and we can approve a credit instantly, real time, with zero human processing. Our average ticket size on Xiaomi is 14,000 rupees. It would almost be impossible for a bank in India to do a loan for 14,000 rupees. This is our integration with Flipkart. We're very proud of this. We're their only exclusive cardless EMI provider right now. This is ramping up very fast. We processed 45,000 applications yesterday on Flipkart alone. The demand is insane. And this just shows how smooth the process can be. We try and replicate whatever user journey is normal for that e-commerce partner, so that we fit within the normal user journey and make the instant payout completely acceptable to the merchant. There's no additional processing, there's no 3-day wait. In fact, we can often settle the same day with the merchant, which is much better than cash on delivery that they're used to for a lot of these customers. And now finally, we're going in store as well. So we started life focusing only on digital partners because they shared our DNA. They were willing to work with us to create a completely automated process. But then some of them, especially the handset manufacturers, said, we want to replicate that experience in the physical store. Please come into our stores. So we're now in all of the Mi Home stores in India today. Again, it's a completely digital, self-serve, instant process. We can sign up a customer, approve a loan, real time in the store, from literally a missed call or a QR code on his phone. Customer doesn't have to do anything with the agent in the store. The store is free to do their normal retail business, so they're happy. And we get to bring joy to the customers of Xiaomi, both online and offline. We'll be in 3,000 stores by the end of the year with this brand, and then we've signed some exclusive partnerships with large POS manufacturers to go into every single retail format. These are some of the other brands we work with. You won't be surprised to see all these names. And the reason this is so important is that increasingly the customer is telling us where they want to see affordability. We actually don't decide anymore what is our merchant pipeline. We listen to the customer. We were really surprised when in our first survey we asked, where are the 2 places you'd most like to see ZestMoney? Number 1, education. I want to pay my kids' school fees. I want to do an upskilling course. We had assumed that world was still reserved for banks and traditional finance providers, but we didn't realize the depth of demand. So now 30% of the loans we write every single month are actually backstopping an education course. Every day we do 4,000 upskilling loans, particularly to software engineers across India who can improve their earning power by taking an upskilling course. And that is completely paid for by the institute. So we have brands like Bits Pilani offering distance learning masters. They subsidize it to get students from tier 3 colleges on the course. The second use case, they all said, which everyone will be pleased to hear, was health insurance. So we now have a health insurance product as well. But what we realized is that represented a fear in our customers' minds that one of the biggest expenses they would ever have to manage was healthcare. And so now we're working with a bunch of specialist healthcare providers and insurance providers to design bespoke products for this customer segment who are completely untargeted by traditional insurance companies as well. What this means is our customers now use their ZestMoney account across their whole life cycle. They use it for travel, education, healthcare expenses. We've actually become a proxy credit card. And so when we look at it, and if we look at the outstanding balance we have with each customer, which is now about 60,000 rupees, we would actually be the 5th biggest credit card company in the country. And that's in less than 3 years. So that shows the value of a completely digital and automated solution that works alongside the distributors. But much more important metric for us anyway is this, and that's our Net Promoter Score. And this is how we really measure ourselves. When we describe what we do, we say we're the most loved financial services brand in the country. And that's how we always hope to maintain. And the reason is that what we do is just so disruptive to this customer. This is a customer who is guilty until proven innocent in the eyes of most traditional lenders. So simply by trusting them and respecting them, we can earn a lot of love very easily. This means we get a very high repeat rate. 65% of customers will have taken a second loan within 3 months. It also means that we're one of the most loved brands online, and the brand name is now searched even more than the word loan or EMI. So we're creating our own sort of proxy asset class. And that means our cost of acquisition is very, very low. So 70% of customers find us for the first time completely organically, and the rest come through our merchant partners. But the love that we get is what keeps us going every day. We've realized we've filled a very, very big hole in somebody's life. Affordability is one of the biggest challenges for our customer. And solving one massive problem gives us the rights and the opportunity to solve other problems for them. And that's why we're now going deeper into their financial life. Here's a bit more about the company. We're, as I said, completely digital, so pan-India. We've actually done loans in nearly 3,000 cities now, in places you won't have even heard of. Very, very good metrics. These are actually slightly old. We're now at nearly 2,000 brands, and dispersal run rate is significantly more than that today. And the people behind it, we were actually one of the first teams to try and do digital lending in India back in 2011, believe it or not. We were part of a UK company called Wonga, which at its time was one of the biggest digital lending companies in the world. It got lots of things wrong, but one of the things it got right was an obsession and a passionate belief in end-to-end automation. And I joined Wonga because I saw that. I saw the depth of technology that they had, and I felt that applied to India, it could have the most impact than any market in the world, because it was clear nobody really believed that a completely automated loan could be done. So the team, we all met at Wonga 7 years ago. Luckily, a lot of them were Indian, so managed to tempt them back a few years back. And we started up 3 years ago, and it's been a phenomenal journey. We have about 80 developers in Bangalore. We've built an entire automated backend, and it's all in-house and completely seamless systems. So now when we go and pitch a Flipkart or a Xiaomi, we're basically the only provider in the market that can meet their TPS requirements and the type of straight throughput that they need. And then I thought I'd just end on a vision of how we could help Jio, what we could bring to you. So our tagline is EMI for everyone. And that's because we truly believe in democratizing access to credit. We actually don't exclude prime customers. 25% of our customers have a high CIBIL score. They use us because they love the product, they love the service, they're digital, they're savvy. But we go all the way down to customers who are earning 10,000 rupees a month, and this is their first online transaction, genuinely new to credit. So what we're most proud of is that we've created a brand and a product that works for that entire waterfall, from the most prime to the security guard in our office. And that's what we think Jio's done as well. So we see a huge brand overlap in the way that India views the Jio brand and the ZestMoney brand. And we have always dreamed of being able to offer packages to our customers. So at the time they buy their dream phone, they should also get their dream data pack combined. And the whole thing should be paid for in an EMI to bring true affordability to the market. So we're working on a couple of these models with a couple of other providers. And we have great relationships now with all the manufacturers because of the amount of volume that we sell for them online. But we would love to bring some of that to Jio as well, both online and offline. And these are just some of the partners we already work with. So it'd be very easy to slot into the existing distribution channels. We just thought we'd present that today. So just to leave you with what that looks like, this is just a picture of our typical customer. Whenever we meet investors, they always want to describe this perfect TG as if, you know, there's one persona. And we always have to explain that India is far too complicated. And these are actually our customers. And we think these are also Jio's customers. So very grateful to be here today. Thank you.